Hi, and welcome to the ICO Show. I'm David Siegel. Today we'll be unlocking the future value of tokens with Lex Sokolin of Autonomous Research. We're here at Autonomous Research World Headquarters to dive into the ICO market. He is one of the leading upcoming experts on ICOs and has written an incredible report. I want to introduce Lex to the show.
Thanks so much for having me. It's great to be here.
Cool. So tell me, first of all, let's do the disclaimers.
Yes.
All right. So I don't have any tokens, and I'm only currently advising one ICO that will probably come out sometime later next year. We're not here to promote any ICOs. We're here just to discuss and talk about our thoughts about the future.
I have a small portfolio of tokens and a couple of startups that I'm advising. All of that is listed on LinkedIn, so you can check that out on your own.
Yeah, and connect to both of us on LinkedIn. Okay, tell us a bit first about Autonomous Research and your group here.
Sure. So Autonomous Research is a specialty research house for financial services, covering banks, asset managers, insurers from an investment perspective. And my practice, called Autonomous Next, is a fintech research practice. So I focus on anything weird and interesting that touches financial services. So of course, crypto, artificial intelligence.
On the edge.
Yeah, like the part of the wave that doesn't make sense to most people. Okay. I try to go there and then back solve how that impacts incumbents, startups, venture funds, and kind of all the pieces of the industry.
Okay, now we're both Americans. You're an entrepreneur from New York.
Yes.
Right? Tell us a little bit about your background.
Yeah, it's funny. We're both Americans
Right.
in London talking about a global phenomenon. So before I built out Autonomous Next, I was a fintech entrepreneur for about 7 years in New York City, building out a robo-advisor company, so a digital wealth company, first called Nest Wealth. That's the one I founded where I was the CEO, and then that was acquired by a tech company called Finar. Now Advisor Engine is sort of the digital wealth for large financial institutions.
Cool. So you had a good exit?
I have a lot of, I'll call it scar tissue.
Right.
Educational scar tissue.
Okay. You had an exit.
Yeah.
Okay.
Company's doing great. Got some money from Wisdom Tree. Still on the board of that company. It's my baby.
Great.
But time to do some
Great,
other stuff.
cool. So you've come to London and you're setting up Autonomous Next. Tell us tell us, is it just you? Is it?
Yeah, so it's really the tip of the spear for what Autonomous is doing with the future of financial services. So next.autonomous.com is the site. I've got a weekly newsletter that does crypto sort of from a macro perspective. Okay. I'll plug Token Economy for the kind of the details because they're an awesome newsletter. Ours is very sort of kind of conceptual in terms of where things are going.
Great.
But then we also do augmented reality. Like if you're into insurance and augmented reality, we have some things to tell you.
Okay.
We do artificial intelligence, so it's a cool newsletter.
And you kind of burst onto the scene several months ago with this report. So tell us about that.
Yeah. So this came out. I've always been in fintech. I love fintech, but I haven't always been a crypto native. I was busy building a company in an adjacent space, and what happened kind of over the course of the last year and a half is that we were watching enterprise blockchain because a bunch of our companies that we cover are in the consortia, and we're talking to them, and it came out that they didn't really know what an ICO was by the end of 2016 and early 2017. Yeah. And the numbers had about 200 million raised. And so we kind of looked at that, and we looked at equity crowdfunding, and it felt like there was a gap, that this thing could be much bigger. And we said, look, all the dApps on Ethereum are just getting started. And so based on kind of the knowledge of the incumbents in the space, which felt very low, even though they were investors and had a huge stake in this, we said, okay, let's dig in. And so we built out this report called Token Mania. And apologies to everybody who's tired of hearing about tulips, which I know is the case. We're fairly optimistic about the space with a lot of complexity around it, but we put out this 80-page report and structured the different parts of it. So how do tokens fit in relative currencies? How are people investing in it? Where's the money coming from? What are the crypto whales doing? Who are they? What is the regulatory environment?
You know the crypto whales?
They're amazing.
Oh.
Once you've seen one, you'll never go back. It's
You've been to
incredible.
Hong Kong?
Yeah, so it was trying to put all of this stuff together into a primer that a financial incumbent, somebody who's fairly conservative, can pick up and say, there's a grain of truth here that we want to invest in or move towards. And part of the reason is to champion kind of the two economies coming together and building something more than they can on their own.
That sounds a bit corporate. But, so you're not a crypto anarchist? Or are you at heart? Tell us the truth.
I'm a crypto artist. I think that I think building projects and companies is an art, and in the sense that it's an art project, you start with a blank slate and you make something new, and there's beauty in the thing you make. And so I hope that people make beautiful things.
That's great.
A Byzantine legal document can be a beautiful thing if it's it can have a beauty to its concept, and so I really believe in some of the amazing things that people are making, and I hope that we keep going in that direction where people are trying to add to the world. And I think that the existing economy is a Lego piece in the future. So I think that we perhaps prejudice ourselves if we say we don't want that.
Yeah, we don't want to flush it down the toilet. We want it to evolve in fits and spurts.
Yeah.
In good directions, without being held back too much by legacy thinking and institutions, I hope.
Yes.
So summarize this report for us. I know you've got some material here. I mean, let's just dig into what your picture, and this came out when? September?
So the report actually was very early. We put it out in July.
July?
It was mid-July, so at the time it was...
I was a bit busy then. So.
At the time it was 1.2 billion in ICOs. So we one of the first to kind of track the flow into the project. Today we reran we've been keeping the list, and you can certainly find it on other sites, but we try to verify. We put a human in the loop, which you can make judgments either way.
Make things worse, right?
But we're at 3.6 billion.
Wow.
Wow. 3.6 billion. So I have.
So we could end the year at 4 billion.
I'd be surprised if we didn't.
Yeah, $4 billion.
Yeah. So this is kind of.
Okay, give us the stats. Run us through
so this one, I don't know if you can see it, at least directionally, but the idea in this one is, and you can grab this on the Autonomous Next site. All of this is open.
next.autonomous.com.
Exactly.
Okay, the report is free.
Yep. So what the chart shows is corporate venture investment in blockchain, independent venture.
That's the dark blue.
Yep.
Is that right?
That's kind of this piece.
Yeah.
And then pure venture is the dark blue piece, right? So 2014 we had a lot of pure venture investing in Bitcoin and blockchain companies.
Right.
Then the enterprise guys woke up, and that's the light blue, and they said,
I see.
Let's cut some checks to be inside of Hyperledger and R3.
Right. Okay.
And then the beige, of course, is public.
Right, but here we see that institutional investing is way down this year.
Well, I think they've...
Is that right?
That is right.
That's
the corporate institute. So the banks, right?
Corporate.
I mean, the banks have made their bet in large part. Which is they have Hyperledger, they have R3, they have digital asset, and now it's...
Wow, that's pretty limited thinking on the part of the banks. I mean, come on.
They have to make that thing work first, right? So...
That's not exactly a portfolio. All right.
So,
okay.
well,
And here's the VCs coming along.
I'm not defending them, but let's not be super mean, because there's two things, right?
Okay.
There's enterprise
I won't be
blockchain.
super mean. Okay. Just be mean.
Just a little mean. A little mean's okay, right? So the enterprise blockchain piece is how do we take out costs from our operations, and that's
right.
what this is.
Yeah, right.
The crypto as a financial asset class is just starting.
Yeah,
and that's a completely
they're not waking up. They're not quite there yet. They're going to be learning and looking.
Yeah, I mean, but if you look at like LedgerX and the CBOE and the CME and the exchanges and everyone who's launching funds, I think they're getting in there, but that's not a corporate venture arm cutting a check. That's capital markets getting built together.
And we should talk about Gibraltar at some point. Okay, so let's run through some more interesting numbers from the explosion, the Cambrian explosion.
The Cambrian explosion. Yeah. Wasn't it like viruses and bacteria that came out of the Cambrian explosion first?
No, it was new species. So, oh, at the beginning, I don't know, but it was lots of new species.
Yeah, yeah. Okay, so I love this graphic, and again, check it out on the site. Maybe you can just show it. So this is ICOs by year, and then it's by type. So what kind of projects are being built?
Okay.
And the beige and the and this is out of 100%. Right, so in here we're at 3.5 billion, here we're at like 15 million.
Yeah.
So this piece, the beige and the gray, is the core infrastructure and the cryptocurrencies, right?
Okay, sure.
So it's things like Ethereum doing its own ICO.
Right, right.
It's just putting the tech in place. So even something like fog computing, right, would go in there for me because it supports all the other stuff that is happening.
Okay, then we move to...
So if we move across the years, what you see the blue come in is basically different financial implementations. So it's things like building out markets and exchanges, building out wallets and payments, and building out banks and lending, right? So it's anything that's financial services industry, and you can see the DAO.
Right, and here's cryptocurrency. So these are all the altcoins, more or less? Or is this the growth of the actual market caps?
That's not the market cap. Yeah, that's the offerings. So it's
so these are altcoins being offered
within kind of the token ecosystem,
which is interesting because that somehow disappears.
Well, this might be a bigger absolute number. It's just
because it's normalized.
Relative.
It's normalized, right? So it actually that actually is probably a bigger.
That's
number.
A bigger number.
Okay, I understand.
But the takeaway, right, is that we started with the infrastructure.
Right.
Then financial infrastructure started to get built.
Yes, right.
And if we look at today, what's I think super cool.
Show me what this is. Sorry.
This big one is DAO, right? So.
That's the DAO?
Yeah.
Oh,
it's not all the DAO, but that's a big chunk of it is an attempt, right? So this is 166 million.
Right.
The DAO is
right.
not
This
all
really
of
is skewed. It should be more like these. They would be 3 sheets of paper if you did it.
Yes.
Yeah. In proportion. Okay. Fine.
But it tells you kind of where the focus is, right? For the builders. And so now we get to today, and we kind of get this magenta piece coming in, and the magenta piece for me is things like gaming, social media, identity, like engagement, and then Internet of Internet of Things. I bundle that with identity, Internet of People, Internet of Objects. So it's basically the use of the infrastructure in real world stuff.
Right, sure. Right,
and so
getting out of finance.
There's the FAT protocol kind of investment thesis, but then there's also the application investment thesis, and I would say that this is really, really healthy to see kind of these ideas.
Yeah, I think of it as protocols, platforms, and apps as we go. And so we're definitely in the platform/app, and we're doing some protocols.
Yes.
But we're really moving towards platforms and apps.
Yes.
So great. That's insightful. Okay.
All right.
Yeah, let's keep looking at.
We're going to go show and tell. Okay.
Yeah.
All right, so.
Bring out your big guns.
I don't have any guns.
Oh, okay. Bring out your big data.
Yeah.
Your unstructured data.
Despite being American. Okay. Sorry to the crypto anarchists. I guess Arizona would be the.
Okay.
Okay, so then the other theme, we talked about the banks and enterprise blockchain sort of being a contained exercise, right? So the next piece is the financial incumbents and then new financial entrants coming into the ecosystem and funding it. So one of the takeaways from Token Mania was, at the time, it was 1.2 billion in July, and so this wasn't big in the news. And one of the takeaways was like, where is this money coming from? Yeah. And there's super simple math you can do, which is, at the time, it was 100 billion market cap in Bitcoin and Ether, and 80% of that was capital gains.
Yeah.
In a year.
Appreciation.
Right. So it's very cheap money, and if you have 80 billion of capital gains, you probably want to diversify.
Yeah, of course.
So just as a natural, easy kind of human action of saying 5 to 10% of my wins this year, I'm going to lock into something else.
And we saw that with the whales jumping on a bunch of ICOs. And I wrote a big piece about that. That was the kind of the 30-second phenomenon.
Yes.
Where whales just took most of an ICO within minutes, right?
Yes.
And that happened much of the spring and about half the summer.
Yes.
Right? And now do we see that? So tell us about, first of all, how much Bitcoin is in the market and how much everything else is, and what is the diversification activity now? Right.
So at that point, we said there's probably 5 billion of demand for ICOs based on those capital
diversification
gains. On just, and that's not even like that's not a secular anything. That's just human nature. We get to 5 billion, and you can see this actually happening.
Yeah.
Today we're probably around 180 billion combined.
Right.
Ether's been flat,
except for this morning.
Yeah, I'm a long-term.
But this is being recorded and it will be shown in 2 weeks. So who knows what will happen?
Yeah, I don't date myself by naming a price. So
it's 328.
328. Nice. Okay. So Ether's been holding the kind of the same level, which I think reflects growing maturity in the space, but then lots of uncertainty between China and regulation of ICOs and things like that. Whereas Bitcoin's been the on-ramp into this world. So even when the New York Times covers crypto hedge funds, which we'll get to in a second, that invest in tokens, and people learn about the crypto world, their on-ramp is still primarily Bitcoin.
Right.
So Bitcoin's had a spectacular appreciation, which spectacular not in a positive or negative sense, but it's like, oh man, that's pretty intense.
Right. It's a lot of billions.
Yeah.
Right.
Yeah. So that would lead me to think there's continued dry powder from those capital gains to go into the space.
But right now we're still roughly at about 50-50, no? Bitcoin versus everything else?
I think Bitcoin's a little bit bigger, but I could be
60-40.
wrong.
It's been, but it really tailed off. I mean, last March, April, it was 80% of the market, right? Now it's been certainly 50% of the market. Maybe it's back up to 60%, but it's in that.
Yeah. We're not getting the flippening. That's not happening.
The flippening is what I want to talk about next. So we saw a lot of ICOs early this year where it was just very fast, and a lot of those guys were out fairly quickly. The price of these tokens after the ICO closed doubled and tripled and quadrupled within days or weeks.
Yeah.
Several of those. That was kind of a pattern up until toward the end of July. Then it really seems to have changed. What can you tell us about that? I call it underwriting, actually, right? Private deals for tens of millions of dollars worth of Bitcoin into ICOs ahead of time. Everybody knowing that they're going to be jumping the gun and getting in. So what do you see now on that front? Last couple of months.
I mean, there's a lot of ways to take it. So there's two starting points. The first is what a token has done from a financial investor and financial product perspective.
Okay.
And then the second one is just the general kind of maturity and evolution of the ecosystem. So if you let me kind of drone on those.
Please.
So
drone away.
Yeah. So in the first one, and I don't know if people really close to the ground on this kind of fully appreciate what they've done, which is to collapse all asset classes and all investor types into the same instrument. So bear with me. So you can take an equity, you can take a payment, you can take a currency, you can take a fixed income instrument, you can take a derivative, you can take an insurance contract. You can take a piece of cloud computing or a piece of human attention or an atom on a tree, and you can put that all into the same software token. I mean, not all of those at the same time, but any of those can be put into a software wrapper and traded, right? Because
you can tokenize any of these units of value of any kind.
And from a software perspective,
that's right.
You know, something can be, it can have attributes of any of these things.
That's right.
Software.
That's right.
So that's unusual, right? Because if you think about a venture investor, the stack of paperwork they go through is different from the stack of paperwork a private equity investor.
That's right. And the open source part and everything, it's quite different.
So that's pretty that packaging is very important. And then the second part is because it's packaged in a way that, because any of these things can be packaged in such a way, different types of investors are now interacting that traditionally never would have.
Sure.
So
okay, so you can make a token for something, but now it's a token now a wide variety of people have access to.
So a venture investor would never interact with a speculative day trader, right? So you take somebody whose purpose is to take a 7-year technology risk and hold it and do that in a portfolio setting that assesses things by intuition and team and so on, and then you combine that with somebody who trades FX 20,000 times a day, and believes
just robo trading,
and is chart driven or whatever. And you take both of those people and you put them into the same market. And on top of that, you introduce, to be a little controversial, I think some of the worst practices of the public markets, which is
front running,
inside information, to some extent market manipulation. So it's like the Yahoo message boards, stock boards combined with like 80s
trolls.
Exactly.
Sure, you got it all.
So so like the Filecoin thing, for example.
Let's talk about Filecoin.
Yeah. Nothing to say about I think technology, the team, and all that stuff is great, but like, if you just look at the numbers, the 50 million or so that was put in by the venture investors who are supposed to take tech risk and have no liquidity.
Are these professional VCs or is this from Angel List?
No. So the first part of the Filecoin slug, that kind of pre-sale, and this is before like the software built-in discounts and the bounties and all that. We'll get to that. So this was just the first slug in the pre-sale, and I don't remember but I think it's Union Square and kind of the marquee venture funds. So they get in at 75 cents or lower, and then the average price of the ICO a week later, in that first hour, is $250. Right. And
what was the sale? Was it an auction format or sale? Was it a straight sale?
They had a bit of going back and forth. So what they did is, the price would rise based on demand in the first hour, and then they would take the average price. So it went from some amount up to 450, and then they averaged that out, and it was 250, and then they gave that to everybody in the first hour, and basically they were sold out.
Okay.
So it's the.
So in other words, $150 million in the first hour.
Pretty much, yeah.
Okay.
So there's a big difference between that 75 cents and that 250. And it's hard to make the argument that that's like a venture.
That they're not day trading it, that they're not just flipping.
And we need the venture bet to exist, because that's I think what the entrepreneurism is, that's what keeps them going, that's what the exit can't be before you built anything, in my view.
Well, we'll argue that in a minute.
That's fair.
Great. Cool. I argue the venture capital class should go get other jobs.
I think it's. I'm not going to disagree with you there.
Polish up their resumes, hit the street. I'm sure they can add value to society in some helpful way.
I think the editing function of venture, like, I think you're right about active management in general, right? But the sort of just that it just seems off that you would 1 week invest 70 cents, next week get 5 times, and you don't have to build anything to get that risk.
Exactly. And by the way, this is everybody's expectation, right? It's an open, let me interject for 1 second. You know, we haven't had this kind of market since the early 1900s, where there were really no restrictions and the capital markets were just getting built, and everybody had a new cereal brand or a buggy or a carriage for horses or a typewriter. All these things just came out, and anybody could speculate on those. It was open to the public. And then came the crash, and then came regulation. And since then, we have not had a time like we have now, where anybody, you know, who's making as much or as little, you know, as just the middle class people can just buy extremely speculative, very high risk things without really any government intervention.
Yeah.
Or regulation. And it's an amazing time, because what I have seen is people are now jaded, and they think that's the new normal, and that they should buy without any KYC, without any know your customer checks or any regulation at all. They have a right now to buy extremely speculative things because they think it's cool, and to put their own little portfolios together in whatever way, and we'll talk about that as well. And so now when I talk about things like equity offerings and other things that are more tamped down and less spectacular, people say, well, what's up with that? We want to have access to everything.
Yeah.
There's a bit of I think the new normal is going to have to change, and so we're going to have to talk about that.
Yeah.
But let's come back to this whale phenomenon you were just mentioning.
Yeah, so I'll go through the other 2 charts maybe.
Sure.
Can I?
Yeah, of course. I will.
Thank you.
Happily.
So also on the site, this one. So this is a chart of crypto funds. So this isn't big Goldman Sachs, Entrain, or JP Diamond. This is folks that are putting together some sort of vehicle.
Right.
That vehicle doesn't have to be a real vehicle. It could be we have a Twitter and a login, right? So a fund doesn't mean I have a hedge fund. It just means I have some project that invests in these things.
Yeah, okay.
And so this is really annoyingly difficult data to get, but what we were able to find is the list of funds, and then their sites, and then we were able to back solve into their inception date. So this is 2011, 2012, up to 2017.
Yeah.
From far away you can tell that.
This is like the Winklevoss.
Yeah. Some of the originals, and then it just massively in 2017 you have entry.
I hear there's about 200 crypto funds. Is that about right?
It depends what
a crypto
what
fund
you
is, but
count.
right.
We have a more conservative 125 number.
Okay.
And we don't count like vehicles like the Bitcoin Investment Trust.
Okay.
So these are kind of actively investing and picking tokens.
Right.
But you can get to 200, and I'm sure that if you are a native Chinese speaker, maybe you'll get to 400.
Right.
So.
And some are actually public. Is it? I don't know what vehicles they are, but some public vehicles are investments are adding crypto, right?
Yeah. So the 2 that come to mind are Overstock and Next.Block.
Now, Overstock is just a company that sells stuff, so they accept crypto.
And they have a project called T0,
right?
Which is going to be an alternative trading system for crypto, and that's been pushed through kind of the regulatory.
But that's technology and market. That's not a fund. Right?
Yeah.
So what publicly traded things can you buy on the market now that include crypto as their holding?
The only thing I know of is the Bitcoin Investment Trust.
I heard there were a couple other.
Yeah, I'd love to Tell me
You
what
know,
they are.
mutual fund type things that have added 5%. Does that ring any? No.
No.
Okay,
I mean, there's
I don't remember any
there's a
names.
bunch of structures like the Bitcoin investment mutual fund.
Right.
That's I think you need a financial advisor to get into that product, or you need to be able to reach an exchange. And so you have that for Ethereum Classic, and you have that for Ethereum.
Okay.
And then there are wealth managers that run separately managed accounts.
Right, and then what about ETFs? Are there any ETFs yet?
Not that I'm
In
aware of.
Ethereum?
There is.
I think ARK Advisors. Do you know them?
ARK Investors. Yeah.
ARK Investors.
ARK Invest.
They have ARK Invest. I think they have some specialist funds, but maybe you have to be accredited to buy into those.
There's not a clear on-ramp, which is why Overstock's price went up 3 times when they announced T0. So Next Block in Canada is the Tapscott
Tell us
vehicle.
about, what's that? I just saw something about that.
Yeah, so I don't want to kind of spend too much on it because I think it's a question mark.
Okay.
They were going to IPO a blockchain fund structure, but some stuff came out, and now they're not going to do it.
I see. Okay, all right.
So
typical crypto activity. Cool, great.
So just on this, you can also see the different strategies in here. So it's not that they're all doing the same stuff.
What's liquid venture? What's that mean?
The bottom part is liquid venture, which is these venture investors who now just are able to trade their tokens once they invest. But it's somebody who's a professional venture person.
But not necessarily buying and holding.
They don't have
Possibly,
obviously.
possibly trading.
Yeah. The next piece is really just trading funds. So previous day traders or hedge funders or like Novogratz would be in here.
Novogratz he's now raising a large fund.
And then you have some further specialization up. So there's like quant and stat arb and AI funds, little ones. Then we have indices. So people who are like, we're going to construct a 10.
Thank you very much.
Yeah, there you go. Actually, so there's indices, passive indices, and then there are active kind of token baskets.
Yes.
So,
and then there are the silly funds of funds, which charge ridiculous fees to buy Bitcoin.
So
good, cool. Again, I just want to come back to sort of the flipping and the froth. Do you have some idea of any changes in the last 6 months between people who are just purely speculating on ICOs and trying to get out as quickly as possible and roll right into the next one? Versus people who are actually buying tokens and building, portfolios to hold and so forth. Do you have any?
Yeah. So my intuition is that there's just, I don't want to say majority, but maybe majority is the froth. Still. And part of that is I've met teams who are geeky tech people, and some of the companies that I'm advising that's what they are. They're building tech startups. And their feedback about how they're going into the market is it's really loud. The marketing machine for pump and dump in this segment is just really loud. And they don't want to pay 50 Bitcoin to raise 500K or 1.5 million.
As long as you're investing the same amount of money, why not just raise the cap and go for broke?
And then the symptoms of that froth are, I'm sure for anyone in the space, your LinkedIn is filled with unsolicited messages.
Every day, all the time.
Filled with honey traps, with ICOs that say, if you click on this, it's a 50% discount.
90% discount. Sure.
And then it expires in 10 minutes.
Act now. Can we get on the phone? We'll be. So I think that's still a really big portion of the market. But and the kind of the thing that upsets me is that some of that speculative behavioral hacking, meaning limited time, discount, referral code, kind of multi-level marketing scheme, is being built into the software. So you can. There are platforms that come with these expiring discounts and with bounty programs and stuff, and so I feel like that is fairly dangerous. On the other side of things is the maturity of the regulatory space.
So whereas in maybe March or May you could say this is new for the regulators, today it is not new for any regulator, right? Like they've at least
yeah, no, they've had some
It's not
taste.
new, right?
It's not brand new. That's right. Yeah.
they've
Yeah.
tasted.
They're
the
still
nectar.
dazed and confused.
Aren't we all?
I think we are. Yeah. Yeah, well, that's okay. Right.
So if you're in the space, you have to know that you're being watched. You know, like if you don't know that you're subject in whatever jurisdiction you're offering, that you're subject to that jurisdiction's regulator, it's really willful blindness at this point. Because we know that the SEC has a point of view, we know Europe has a point of view, we know China and Russia have a point of view, we know every jurisdiction is starting to develop a point of view, and so now the kind of the funky way of this is there's all these ICO lawyers, you know, that are being hired by ICO projects, but it's maturity in the space.
And there's white paper writers. I think they're down to about $40 an hour now. In case you
That's
white
all it is?
paper. I think because there's more competition.
But end of the day, you know, it's in the right direction. Like there's more features within the ICO. There's more elements and there's more things to consider. And I do feel that ICOs are kind of graduating from this toy, which is super simple but has better infrastructure, to something that has attributes, and then those attributes will be negotiated, but it is more mature.
Okay, quickly, you promised the Filecoin bounty program. Do you have any insights on that?
I have no idea what you're talking
You
about.
said you were going to get to that when we were talking about Filecoin. The bounty, or any bounty programs in general. What do you think is their effect? Because I have a big bug about this.
You know, I think it's part and parcel of the same challenge we have for, honestly, the entire internet. This is not just an ICO thing.
Exactly.
You know, so you can go from the political election conversations about, and you know,
how much time do you have?
Yeah, not to,
we'll bring in pizza.
Not to make any particular lean, but just the mechanics of how you can use software to affect opinion, right? Where you can.
Sure.
So I'll give you the stats on this because
please.
Facebook has 270 million fake accounts.
And I'm 3 of them.
Yeah. Is that true?
I'm 2 of them.
It's pretty good.
I can't say how many I have. Those are the ones we know about. Come on.
Those are the ones we know about. Yeah.
So it could be worse.
Manufacturing a point of view is really easy and super cheap.
Yeah.
And you can do that for what do you believe in, and then you can also do that for what is this token worth. And so I think software at scale is being used to create opinion, and I think the bounty programs, you know, a smart dude can write an automated marketing spammer that just goes out and posts on Bitcoin Talk and 4chan and Reddit and Twitter.
It's happening all the time, right? So it's really an arms race, and it's escalating all the time. So quickly about bounty programs, a quick story. I once bought 5,000 Twitter followers for $5 just to see on Fiverr, and I got them, and within about a week, Twitter had eliminated them. Yeah, that was really interesting. It was an interesting experiment.
Good Twitter.
Yeah, right. So
I guess.
You know, phantom, shadow accounts that don't.
I apologize to crypto anarchists.
No, I thought that was great. So bounty programs. First thing is I want to disclose that we engaged in bounty programs for our ICO at the Pillar Project, and we paid people in tokens, and we did not require that they disclose that. And this gets to a larger discussion, and maybe we'll have it sometime, but just to summarize it, I wasn't happy about that at the end. It was just kind of, they said it was standard practice not to disclose it, and I said, that doesn't sound right to me. They said, no, everybody does it. I said, okay. So then, you know, what people don't realize, and there's, first of all, for the foundation, there are something called truth in blogging laws in the United States. Are you aware of truth in blogging? You have to disclose any remuneration you get from anybody, any product or service you talk about. You can, it's some kind of federal offense. I guess it's a misdemeanor or something if you promote something and you don't disclose it in your blog. This is about 4 years old already. So.
And this isn't even selling unregistered securities.
This is just blogging.
Yeah.
And just on selling fidget spinners or whatever. So,
I have 10 of those.
But you got to disclose if you're sponsored, and so you don't have to wear the logos on the T-shirt, but you have to disclose it. But in the rest of social media, it's not true. There is no such law, and there is no practice where people disclose. It's the rule not to disclose. It's unusual if you see a disclosure. So on Reddit, on Bitcoin Talk, on Steam, on YouTube, all of these people promoting things are not disclosing. And we did it, and I didn't like it. And so I'm interested in starting, if anybody's interested, we want to start what we call the clean communication standard, where you disclose, and we'll create a website with a manifesto, you sign the manifesto, and then whoever you are, on YouTube, on Vine, on even Telegram, anywhere, you have to put a little badge or a quick, couple of words saying, I'm being paid, I'm being rewarded. And by the way, the cool thing is you can say, I'm not being paid. That's even better, right? You disclose your affiliation with the people, with the projects that you're promoting. That's not done, and so you should assume, and that people on Bitcoin Talk and Reddit, when they had a pillar sign, signature for a pillar, for about 3 weeks, they had that, and they were talking about pillar. By the way, we paid these guys in 2 shifts, 24-hour coverage, to watch for things and to say things, and they got rewarded not in money, but we paid them in tokens. And 2 things happened. First of all, after the ICO, you see that these people who are so earnest and eager to set things straight and tell the truth about Pillar, they've got some other signature now for some other project. They don't care really about the project. And second, you see tokens coming on the market during the ICO at lower than the ICO price onto Ether Delta. Why? Because it's pure profit for them. They don't have a cost basis. It's just their time, so they're just trying to monetize. So they'll start selling right away. So I'm really interested in setting better standards than that. And number 1, disclosing. And number 2, not doing these 50 to 90% pre-sales, which is, again, just incentivizing people to make money fast. And 3, pay people in tokens that are locked up, not in tokens that they can liquidate within days. We had a 9-month lockup for most of our marketing, but the bounty guys would not accept it. They said, no, you don't get our services unless we get free tokens.
Yeah, so, there's a game theory equilibrium, right?
Yes.
Where if everyone's doing bounty, then everyone's doing bounty.
Yes.
There's no choice.
Yes.
And, for the folks who watch this who say, I don't care, I want to market the thing and I want to raise the money because my project is cool.
Right.
Or
sky's the limit.
I built I built this ICO launch platform, and sure, I use software because I'm growth hacking.
Sure.
People will say that, and that's fine. And I guess my appeal is to the following, which is there is a premium for an efficient market. An efficient market which has good information efficiency, right? Where the people who are investing in stuff have information that is similar. If you're invested in a public company, it's information that is exactly the same.
Right.
But information that is close as possible to the truth about the project. We want that because it makes for a good ecosystem.
Right.
And it's the long game, right?
Right.
So if investors,
there'll be fewer hidden bombs.
Yeah, if investors are buying stuff that they believe in and they're getting stuff that they will do well and the selection process works, then this is a new economy. It is the new infrastructure, and we have the opportunity to build the new world.
Right.
If instead it is not that, and it is just a speculative bubble, it'll get shut down. And that's why we want the other equilibrium outcome. Not because we think growth hacking sucks, but because we think that the underlying tech is too important to jeopardize by bad capital markets practices.
Yeah, we're building a new economy here. So do you really think it is a bubble in the tulip sense? Because I've studied bubbles, and so I've got a particular opinion on this. What is your opinion?
Yeah, I think I'm going to be outmatched on this one by, so there's some floors you can put in, and there's some arguments by analogy that I made in Token Mania. The data point around .com, because that's inevitable comparison.
Yes.
The data point is between 97 and 2000, there were 900 tech IPOs.
Yeah.
And at the time, IPOs were much smaller. They weren't like 5 billion.
Yes.
They were smaller than most, private venture investments today. So 30 million IPO and so on.
Yeah.
There were 900 of those. Within 10 years, 84% were gone.
Yeah.
Right, just gone.
Right. That's right.
Within 5 years,
Sock
over
puppets,
50%
sock
were
puppets
gone.
and all. That's right.
Yet, Amazon and Netflix were in that set. Amazon owns all of retail that matters. Netflix owns, all media that, all video media that matters. And they're built on an infrastructure that the music labels and Walmart and all that. I mean, very hard to compete with.
Yeah.
And so, by analogy, nearly everything in the market today will be gone, I think. But the things that remain will be a winner-take-all outcome. And the good news is that the winner doesn't have to be Facebook or Amazon. The winner can be all the customers, because all the customers own the platform.
Exactly.
And so again, so to me that's the optimistic story. And I think now is a moment where we can jeopardize that by bad practices.
Yeah. So to finish the bounty thing, I think it's all about disclosure. Growth hacking is not going away.
Yeah.
If I get somewhere by growth hacking, that's my hard work, and I'm proud of it. I just think we have to disclose. Mm-hmm. Otherwise, you have hidden bombs, and those can detonate. And if they all detonate, we have an avalanche, and that's terrible for the whole market, right? That starts the flu that everybody catches. So. Disclosure is really important, and I want to work more, and not just for ICOs, but for everything you see on YouTube, all the people touting all these products and investments and everything. You're just going to have to disclose, and we want volunteers to come together to put a group together that I call clean communications, to put together those disclosure notices, just like on Creative Commons. They have a set of disclosures that you can build into your codes. Actually can be seen by search engines and so forth. They can search by these various kinds of disclosures, and that's going to be important. Also, you may end up in court facing people who are very mad at you, and you want to be true to your disclosures, and that will protect you. So that's number one. Bubble wise, I think that it's your perspective on the late 90s, when you were in kindergarten and I was part of it, it is right. We came out overall with a much larger market than what went down the drain. Yeah. And so that is all part and parcel of the creative destruction of moving society forward. So you can expect a lot of it. But I believe we are building a new token economy that will be in the trillions. So I don't see a couple $100 billion going down the drain being particularly bad. I think that's just part of the experimental laboratory we're running here to find what works. I hope it's not all winner take all. I hope there are different flavors of things that, I'm really going to be happy, and we're gunning for 50% wallet market share. And I hope there are 100 other kinds of wallets that have various things that are really valuable to people, right? I hope that and good news, we're making a lot of progress on open source, that if open source dominates, I think that's fantastic, right? Because then some Zuckerberg-like person will not, emerge to rule. Even though we have people like Vitalik Buterin who are extremely influential on open source projects, eventually, and he said it himself, the crowd will kind of overtake that and will rule. And that's why governance is going to be important in the future. But right now we're shooting it all out. It's a shooting gallery. There's all kinds of things flying everywhere. Let's understand. one quick question I had. I heard that there were 400 ICOs came into market last week, in 1 week. Do you have any sense of the current froth?
So we use humans for our data.
Oh.
So I have to apologize for that.
No robo research.
And so we look at a bunch of sources that do use robots and scrapers, and we only track stuff above 1 million that's raised.
Sure.
That's not to say seed rounds shouldn't be tracked. It's just sort of a different.
But not raised. I mean announced.
Announced.
Came. Yeah. Announced last week. I don't know.
That's spectacular.
Do you have a sense of? I don't know if it's true. So I'm not saying it's true.
I don't know if it's true, but I do know that there are more and more ICO facilitators, so platforms that will be like, all you have to do is come there and they'll launch it.
We got your pre-sale nailed.
Right.
I've heard that. We'll take care of that. Oh yeah.
Sorry, just doing some mental math on what I get pre-sale.
Exactly.
Yeah, so there's more and more platforms, which means, right, it's more and more accessible, and then you have on the other side this rise in crypto funds, so it would feel like that's reasonable.
No, but you don't have any numbers.
I don't have a number.
So you have numbers on ICOs that
have raised.
That are closed.
That are closed and are over 1 million. Yeah.
And what's that right now?
So that's the 3.5 billion number.
No, but what the
I don't
kind of on the current rate recently closed or like month to month?
So
like we're kind of looking for peak ICO, right?
We're not at peak ICO.
Okay.
Yeah. So last month it was a little bit over 3 billion, and now we're at 3.4. So it's
on a month-to-month basis, it's growing.
It's growing.
And what do you see for? Let's predict peak ICO then. Now we know
that's mean of you.
No, we know there's regulatory uncertainty.
Yeah.
So assuming that regulators don't come in like Chinese, with a heavy hand, what would you say for the next 6 to 12 months?
It's all just black swan outcomes, right? Like it's all tail outcomes.
Right.
China spends 100 billion on all the tokens, or Russia mines 90% of everything, right? Like those tail outcomes are likely. That's
some tail outcome that we can't predict is likely.
Right.
That's right.
So like a steady state is tough to say. If we finish at 4 billion this year, that seems conservative to
Right. And so how much next year? Yeah.
I guess the question is more or less, and I think it's more. I think it's more than 4 billion.
All right.
I
mean, is it going to be a chart that looks like this, so that next year's this is this year, and this is next year?
For next year, and this is where you and your audience may disagree with me. I think for next year, the main capital influx will be traditional finance companies. So I think what 2018 is about is the token economy becoming an asset class that is accessible and tradable by capital markets desks, hedge funds that have massive funds,
Charles Schwab, retail,
Fidelity, Schwab, maybe the first ETF. There's definitely exchange-traded notes. I think Hargreaves, Lansdowne's working on an ETN.
Yeah.
So I think in terms of capital influx, that to me is more interesting than, I think the whales are in, and the whales are going to keep spending their capital gains, and so another 5 billion next year, sure, makes sense.
Yeah.
But it's the big delta is going to come from, some pension endowment says, actually, of the 500 billion we manage,
1%,
2.5% into crypto, and that's going to move all this stuff, and it's going to, it's going to not only do that, but it's going to stress the exchanges, which can't deal with that flow, is going to blow up in a positive way the over-the-counter players, right? So Genesis, B2C,
There's so much over-the-counter stuff.
Because you can't trade it on a retail.
Over-the-counter is not on an exchange. Side deals that people make, and boy, if you want to sell 10 or 20 $million worth of Bitcoin, or you want to buy 10 or 20 million, there's so many guys who will take that phone call and are interested in that.
Yep. So I think to me, that's where my that's one direction where my research is going, is figuring out when the traditional financial money
when
comes
the
in,
big bond
what does it
drops
look
in.
like and
Yeah.
where does it go? Because
Okay.
that's going to be, from a magnitude perspective, that's
Okay.
going to be very, very big.
Okay.
So that's kind of number one.
So we're bracketing it at somewhere between 5 and maybe 20.
Yeah,
I mean, it just could be another one of these
I think
next
that's
year,
fair.
without drastic regulatory intervention.
Yes, without a black swan, I think between 5 and 20 feels
Yeah.
in line.
Yeah.
I mean, I'm sure we'll be sitting here in a year, and it's it's like
We'll be talking about the great crash of 2018.
I mean, I hope it is this token economy that blossoms, and it's not just everybody buying Bitcoin, and Bitcoin's great. It's just the tech coming out of this is cool.
Yeah.
A question I have for you is, I have these two theses, right? The traditional economy one, flowing in, seems pretty obvious.
Yeah.
And then the second one I have, I'm trying to chew through, is maybe crypto's not for people, maybe crypto's just for machines. So is it the case that in 5 to 10 years, 95% of crypto transactions are drone to charging station or self-driving car to toll booth, and
or
the human is not in the loop?
Phone payments, and you never see really. And
what these, so like if you look at decentralized exchanges from, AirSwap, of which I have a tiny little amount to disclose.
Congratulations. Very exciting protocol. Yeah.
So let's say AirSwap's not about people making decisions, but it's about one machine superorganism interacting with another machine superorganism, and the way they pay each other is their utility tokens interacting. And so to me, that's like, it's kind of a biological argument for how these things can grow and communicate. And if I think about the future, that to me feels like it's going to be, that's kind of,
it could be a large part of it.
Yeah.
Absolutely. I mean, the pillar token disclosure, I own a buttload of pillar tokens, is meant to be a meta token. And so you'll never see, I hope, many of the little tokens underneath to do all their specialty things. And the question is, what's a unit of account going to be? Is it going to be $1 for if you're in the United States? Is it going to be £1 here in the UK? Or what do you think? How will people think about, their holdings? Will they think in terms of Bitcoin? Will we price in terms of Bitcoin? Because what you just said sort of argues for dollars and pounds with all the coins underneath, right?
Sure, it's going to be Chinese Bitcoin.
Well, you mean Chinese currency becoming?
Yeah. So one of the
crypto Chinese currency.
One of the black swan sort of events, right, is a concerted effort by one of the Eastern central banks, and I think it has to be Russia or China, because we've heard them talk about it.
Okay.
I mean, Singapore might do it, and Australia.
They've done an experiment.
Right. But we haven't seen that at scale, right? If one of the Eastern countries says we're going to do a crypto backed by us, and it's going to be 10% of our money supply, or India does it because they don't have money at all, so of course all the Bitcoin maximalists will say that's nothing, that's meaningless. There's no such thing as central bank backed cryptocurrency.
Yes,
but
right. But there
exist.
There will be. I don't think it's 2018. I think in the next 20 years, all the majors will do something like, and I don't pretend it's today's blockchains, but essentially a shared ledger that everyone trusts to be accurate forever. That's my definition.
Yeah.
Somehow, and I think we'll get rid of cash. I mean, one thing I want to talk about quickly is money laundering. People may not know this, and I keep wanting to repeat it, but no ICO that raises money now from anonymous people without KYC and know your customer package of identification gets to put money into their bank account now. And Swiss banks are closing accounts of companies that have raised money through ICOs, and they're not allowing them to cash in. Why? Because there's no AML certificate that comes. Oh, they say, well, great, fantastic. You've changed your money into. You've got a couple $1,000,000 or pound Swiss francs you want to put into the bank. Fantastic. Show us where you got that.
Yeah.
Well, we got it from a couple thousand people who donated money anonymously, token buyers. Well, so great. Just tell us the names and addresses and numbers and all of all those people, and you'll get to cash in. That's not happening. So we don't have those certificates. And from an AML point of view, I want everyone to understand almost no money laundering is happening in cryptocurrency. It's almost zero compared to what really happens in the money. To launder money have no problem. They use cash.
Yeah.
And people don't understand this, but there are $7,000 of cash, physical notes, for every man, woman, and child in the United States. And they don't have $7,000 of cash at home. So it's $120 bills around the world that are being used to launder money. And in fact, we'd be safer and have less money laundering if we would encourage the use of cryptocurrency. Another thing under my bonnet that I just want to help regulators understand, that the AML requirements are stifling innovation and making it very difficult. You can't get a bank account in the UK. You can't get a bank account really in Europe. That's why we're all going to Gibraltar and trying to just form one line and not get down there in plane loads all at the same time and overwhelm them, because the banks won't open an account.
Yeah. I don't remember the name of the firm, but I was talking with a firm whose job it is to
AML?
To do AML. I mean,
coin firm.
Yeah, coin firm. So I've asked.
Pavel.
I talked to Pavel and I asked him what percentage of funds is money laundering in crypto versus the real economy, and his answer is no more than the same. It's the same or less.
I'd be surprised.
Wow.
So that surprised me. That's more than
He didn't tell me it's exactly the same, but he had a strong view, and he has a background.
Well, he knows AML.
Yeah.
Oh yeah.
So that it's no more or less. So kind of Diamond's claim about whatever Diamond says about fraud and scam
it's ridiculous.
Factually incorrect.
I'm surprised it's that much though, because I believe Pavel. So if he says it's roughly the same, that's interesting.
Yeah. So that said, regulation isn't this exogenous horrible thing that has befallen smart entrepreneurs. It is you mentioned the crash, right? It is a product of the function of the crash, where human beings are trying to prevent something that was bad that happened before.
No.
Right?
No, it's highly political.
Okay.
It's extremely political.
There's a reason for it. There's a reason why people want to know where the money comes from. And
a political reason, because the guys who want to launder money have no problem laundering money.
Yeah.
We're in a situation right now where, for me, to cash out to the bank and get some money to pay my rent or make my credit card work, I have to launder my money through my brother or somebody. I haven't done this yet, but I'd have to launder it to cash out, because they think that my ether are tainted from our ICO.
So to just on that, right? Another symptom of the ICO market being more mature is that when you were doing it early, now you have this exposure. That exposure has been fixed. So Civic and Self-Key exist.
You have to KYC. If you're doing an ICO, you have to KYC.
And it's easy to implement.
And it's a pain in the butt if you have to do it on every single site for every single ICO, to do it over and over. And that's why we're building the Pillar ICO wallet. So you do it once on the wallet, and then any ICO that's on our platform.
Do you know the Self-Key guys?
So
the KYC chain?
We've looked, we're also looking at, what's it called, Josh?
Coin firm? Or?
No, the ICO, the KYC, Yoti.
Okay.
Yeah, so there's a bunch now, and they have APIs, they tie in.
You bring it in. And
that's right. But I want people to do it once, and not on every silly site they go to, where you have to register and get an account, and you can see your holding. How can you do that for 30 ICOs? That's ridiculous.
Yeah. So I mean, I think that's part of the maturity of the ecosystem, and
it's also unfortunate, because there is no real reason. The reasons behind that are political, and because it doesn't keep people safer in some way. We don't think we have any evidence that that's beneficial. It's just compliant. It's the only way. So when we don't need bank accounts,
I'll give you an example out of fintech that has nothing to do with crypto. Okay, so in the U.S., if you're a fintech company, if you're a bank, you're subject to one set of regulation. If you're an investment advisor, it's a different regulator. Yes. If you're a payments company, it's a different regulator. Right. So the OCC regulates banks, and the comptroller of the OCC last year said, why don't we have a charter to make it easier for fintech banks to have deposits? Okay. Wouldn't it make it better for the economy to give them some sort of carve out?
Yeah. Sandbox.
Yeah. It's a special. It's still a charter. It's not a sandbox, but it doesn't.
Okay.
The states, the 50 states, just hated it. Huh. They hated it, and the reason is that there's about 10,000 banks in every single state, and they're tiny, and they have an industry association.
Right, they have lobbyists.
And they lobby the states, and the states say it is in our interest to have these banks exist in our state. And a tiny little bank, when it competes with a fintech, a tiny little fintech company that has better technology and now a charter, will end all my banks. Yeah. Right? Right. So you have the states essentially trying to sue the OCC. Wow. And the same thing in the investment advisor world. In the investment advisor world, you have the states suing the Department of Labor, which has the fiduciary rule, right? And it's this it's this kind of natural problem of legacy versus innovation, and it's true in crypto. It's true everywhere.
Right. We're going to work our way through this in fits and starts. I'm just hoping that the regulators realize this is a new framework, a new economy, and they should not try to cram it into the old frameworks.
And on top, what's happening is the global race for a regulation self-haven, right? So in the U.S., nearly all companies are incorporated in Delaware because Delaware has the best corporate law. Exactly. And it's the same thing now happening on a global scale for fintech and crypto.
And it may be Gibraltar, it may be
could be Luxembourg, could be Switzerland.
Yeah, Switzerland is looking more difficult.
Is it?
Yeah, and maybe Singapore. We'll see. That is all the time we have. We're going to have to do this again. This was too much fun.
Yes, sir.
I have to just thank, first of all, our sponsors, the Pillar Project and 2030, and our amazing staff. We have Tony, Ash, Will. We just welcomed Ellen. We have Aaron. I really hope if you want to participate, we're going to have an online community for the ICO show and much more coming. I appreciate your time. Please contact us if you want to submit or have any comments or questions we can answer. That's at theicoshow@gmail.com. We're also looking for online community organizers as we spin up our community. Don't forget, this is not investment advice. For investment advice, talk to a qualified statistician. Do not talk to your investment advisor. They don't know anything about investment. This is David Siegel for the ICO Show. Stay safe out there.